Welcome back to Luke the Trader, and this time with Darcy Christian. Could you please introduce yourself and your company?
Sure. Thanks, Luke. My name is Darcy Christian. I'm the CEO of Ashley Gold Corp. We are a gold and uranium exploration company, and we've been trading on the Canadian Stock Exchange since 2022 under the ticker symbol ASHL.
Mm-hmm. So why should anybody be interested in Ashley Gold?
Yeah, we've got a lot of exciting things coming down the pike right now. So initially, we IPO'd as a gold exploration company, and it's been quite difficult for gold juniors to say the least. But we have assembled quite an excellent land package in the Dryden, Ontario area. Those properties, for the most part, we own 100%. And we're looking to drill one of those called the Burnt Hut Project, which we've had a couple discoveries on in 2023 and 2024. In addition to that, we entered into an option agreement on the Sahara Uranium Project. It's a massive uranium project in Green River, Utah area, where Western Uranium is building their new uranium processing facility. We're about 10 miles away from that. So that one's a bit more of an advanced project. Again, we plan on drilling that this probably September as well. And, that's more of an advanced project. So the drilling that we're doing on that is to bring the historic reserves of 500,000 pounds. And we've done some modeling that suggests it could be significantly bigger. So the plan on that one's to do some confirmation drilling and get that up to a compliant 43-101. So we got a lot of activity happening here in the next little while. So we're really excited about that.
And as you already started a little bit talking about your assets, be it uranium, be it gold, can you just give a quick overview to the listeners out there what your projects are and just go a little bit more in depth, perhaps?
Yeah, sure. So for those of you who don't know, the Dryden area, there's been quite a bit of activity coming into the area the last little while. We're next door to Dynasty Gold on our Howie property. They're DYG. They had some really good drilling intercepts last year. They're actually doing 4,000 meter program right now. So we got our fingers crossed on that one. We've got an IP survey that's being processed right now. That should hopefully show us some deeper targets where we can emulate some of the success at Dynasty. And then we have the Tabor Secuse. Those are both past producing mines. We actually drilled the Tabor property last year with success. We ended up with 5 grams over 8 meters or 41, 42 grams per ton gold. That system's generally a little bit narrow vein, but really, really high grade stuff. And then Secuse we optioned, and that one's a past producer as well. Seems to be open at depth. We're really excited about that one. Alto Gardner is a little bit further north. That's kind of surrounded by a company called Dryden Gold. They IPO'd last year. And we had some interesting surface samples come off that here and some new vein systems. It was the first time we actually got out to the property. We had intended to go out late last year, but just ran out of the season. And then north, the Burnt Hut property is the one that we're going to be drilling here. We're really excited about that. In 2023, we found a new system that had never been sampled before, and it came up with up to 50 grams per ton gold. To the north of that, to the west of that, this spring, we found another on echelon series of vein systems. So that's things shaping up where you could actually get some really good intercepts along with some really high grade. So it's something that we've always been looking to do in the area. And that property is right adjacent to Treasury Metals to the northeast. Our uranium properties, sorry, this is maybe not quick, but our uranium properties in the Green River, Utah area, trying to think of some of the areas. So Pegasus is in the neighborhood there, as well as C2C Metals. And then Western Uranium, as I had mentioned, is building a mill up there. We were lucky enough last time I was down to go and visit their mine over in Nucla, Colorado. And I met George Glazier and Mike Reuter. We had a chat about, the future plans and stuff. And they're obviously very bullish on building a new facility. And the reason why is the current plans for Energy Fuels right now is to convert their White Mesa mill, which is the only primary uranium milling facility in the continental U.S., into a rare earths facility. Once that happens in 2026, 2027, there's going to be no game in town. So George saw the opportunity there, and that's why he's been working on permitting this thing. We ended up signing an LOI with them to produce 500,000 pounds of uranium, approximately 500,000 pounds. It's based on tonnage, but based on our average grade, it'd be about 500,000 pounds of uranium. Facility is 10 miles away with fantastic road access. We're right off the I-70. You cannot ask for a better location than what we have on that property. Yeah, so that's
the infrastructure for the uranium package, right?
Yeah, exactly. Yeah. All of our properties, so with the exception of Burnt Hut, it's easier to access by boat. But usually when we're looking at projects, we look for some ones that we can get out near year round and right off infrastructure, and we have that for the most part. So.
You're currently raising money and expanding your land package. What is your goal with that raised money? Like, what are you planning to do?
Yeah. So I'll just talk quickly about the land package first, and we can go a bit more in detail about it later. But we've got a conceptual play that I don't know if you're familiar with the Wyoming production, but it's in situ production out of like wellbores, essentially. Instead of actually mining the primary uranium, sandstone in this case, they do an in situ recovery. We believe that we've got the geology set up for that. So a big part of this land package was to make sure that we've captured the big part of that play, and that's why we did that. So I think we have got 400 and something claims. We just picked up another 200 claims. But on to the financing. The financing is going to be critical for us here, and that is going to be to raise funds for drilling both the Burnt Hut and the Sahara property. As part of the terms of the option agreement, we need to drill 1,000 meters at Sahara, and then provide a up-to-date compliant resource. So that's where the use of proceeds are going to be going towards both those properties. With a successful raise, and so far it's been pretty well received on the street. It's we're getting in. As far as Canada, we're getting into a little bit of the doldrums here in the summer, but we're confident we're going to be able to wrap up that in the next month or so.
Can you provide us some insight into the shareholder structure and insider ownership, as well as major shareholders that could back up your future financings if needed?
Yeah, sure. So we have about 35 million shares out right now. With this financing, it'll be closer to 50, which is a bit more dilutive than I had wanted, but that's just what the market is bearing right now. So we were intending on raising a little bit higher, but that's beside the point. We deliberately, when we IPO'd with a really tight share structure, so we had some ability to make sure that once we did find a project or had a discovery, that we weren't going to be, blown out to oblivion by then. So, at 50 million shares, necessarily say we're a tight share structure, but it's still very well, very well, managed share structure. We don't like to waste money, and as part of the option agreement, we ended up working with our major shareholder, Greg Coford. He's with Sorby Bornholm, and they have committed to participating. Actually, it's in our agreement. He wanted it in there that he wants to maintain his ownership percentage and probably gain ownership percentage in the property with his intent to own, probably almost half the company through financings, participating with us to get this thing to production. And that's an important part. Is once we get this thing producing and cash flowing, that's when the dilution stops, and that's something I'm really keen on. That's why I kind of focus on a near-term production story.
And how will you ensure keeping dilution low as you move towards the goal from becoming a sort of explorer to a producer of uranium?
Yeah, so we're going to keep our dilution as tight as possible, but in reality, we're probably going, by the time we get into production, we're probably going to be over 100 million shares. And that's just, it depends. I mean, if the market starts realizing, what we've got here as far as an opportunity to develop cash flow in the near term, then perhaps our dilution will be lower. But as it is right now, we will be over 100 million shares. But as mentioned, Greg is going to be aligned with the shareholders. He's going to be very likely coming on as chairman of the board at some point. He'll be holding on to his stock. So although we'll have over 100 million shares, like I had mentioned, a big portion of that's going to be held with insiders. So the insider percentage is going to go up right now. Right now, I think we've got like 20% insiders.
Like 25.
Management friends, or 25. Yeah. So so that's how that's gonna that nut's gonna be cracked. But so the dilution is gonna be insider held with a project that's quite advanced. As we normally, a company our size wouldn't have an opportunity for something like this, but because Greg was already a shareholder and he likes the management team, he likes what we're doing. He wants to participate. He wants to make this thing into as big as possible. Like, as an example, Energy Fuels. I know it's a little bit of a different beast, but Energy Fuels, right, last year I believe produced 500,000 pounds of uranium, which is what we're trying to produce, right? Their valuations $1 billion, and at long term, that's what Greg wants to create is a company like that. So.
And sort of talking about the 500,000 pounds of uranium, do you have a mining permit for that, or how is this situation looking like in terms of the permitting?
It's pretty early days right now. We're working. The first step that we're working on right now is opening the portal. We're in final discussions about that. The portal was so the mine itself was put into production in the late 70s, and 3 Mile Island incident happened in the U.S. and they ended up not really producing a lot of the ore. So, a lot of the infrastructure was built ready to go. They started trucking ore out of there. Now that was I think they shut that in the mid 80s or late 80s. So, in my head, that's only a few years ago, but then I start actually doing the math. It's been a few years. I'm getting older than I think I am. But so the first stage will be to open the portal up, and then from there we're going to we'll go down and see if there's any rehabilitation, and there will be some rehabilitation that needs to be done to get down to the ore face. And then we can apply for an exploration permit. And what that will allow us to do is is better define the underground, get it all ready to go for production, whilst we're permitting for small scale production. At these sort of numbers, it's not the first stage. We won't be producing a ton of ore, 500,000 pounds.
Mm-hmm.
Still highly lucrative for a company our size, and it will allow us to grow. But what we're looking at is a mechanism to get to cash flow as quick as possible. So,
So are your projects on patent and land or BLM or any other?
Yeah, no patented land. The vast majority of the projects on BLM. I think we do have 3 state leases as well. So we'll be going, down the BLM process of permitting for this stuff, which, it is what it is. Utah is by far the friendly. Well, basically top 3 states in the U.S. for permitting. So far, they've been so friendly and accommodating to us. That's a big reason why George chose Utah to put the mill in. Partially because they do have a lot of historic primary production, but not to slag other states, but it would be a lot more of a process to get the thing permitted in, say, like Arizona or something like that. We're optimistic. So far, the state has been working, or the state and the BLM have been working really well with us. They've got a process, and they seem to follow it. And there's not a lot of delays from what we can see. To open up this portal, I think it's only been 5 or 6 weeks. If we were to do that, say up in British Columbia, I don't even know how long it would take. So.
Yeah. And the next question will be, why does your marketing material forecast that the Green River mill will be operational by 2026 when they haven't started construction yet? And who will do the mining?
Yeah. So a big part of the construction phase in a mill is actually not the longest part of it. It's the permitting. And with a uranium processing facility, you have involvement of the EPA, and there's some pretty stringent rules to make sure that everyone's safe, which is, they're good rules. Part of it is baseline studies where, a company has to come in and do baseline studies in the water and the air, and for 1 to 2 years. They're about halfway through that process right now. So that's why the construction, I believe, it doesn't look like they've done a lot necessarily, but they're definitely way further down the process than what people think. They do have all their construction permits ready to go. Like they're ready to rock as soon as it happens. George estimates, late 2026. It might spill into 2027 or something like that. But if the White Mesa mill is still processing ore and we're ready to go, if we need to ship maybe our first load out to White Mesa, it's possible. The trucking costs will be significantly more just because it's 10 miles versus 300 miles. But if we're looking at, if we think that's the best way forward for us, if we're kind of sitting and waiting, which, to be honest with you, I think we're the way that it's looking, both our permitting and stockpiling and their construction should be pretty darn close to being the same time. So we're not too concerned about it, but yeah, so we do have a bit of optionality there as well.
And what will be the economics of your production goals, and why do you think it could fund further growth for your company?
Yeah, that's a bit of a tough one. At high level, I don't like to say too much because I don't want to be disingenuous because I
Mm-hmm.
don't have all the answers yet. But listening to some podcasts from George and stuff, there's a couple different options we have. We can either do third party milling. That's about $100 a ton or something like that. The economics of that would be slightly better, but also quite a pain in the butt because what you got to do is basically clean out the mill in between. So you've got a break between, oh, this is our ore and this is your ore. The other option
Mm-hmm.
is to sell the unprocessed ore straight to the third party. That's usually, as a rule of thumb, it's like 50% a spot or something like that. So, right now it'd be
Mm-hmm.
40-50 bucks a pound. And then on top of that would be, your cost to get it out there. Like I had mentioned, our trucking costs will be essentially
Mm-hmm.
nil. So it's just your mining costs. And I haven't really looked into that, but my back of the envelope, I'm thinking it's probably going to be like, $20 a ton or something to pull out. So with all that kind of rolled in, it's a very broad range, but I think, 10 to 20 million US
Mm-hmm.
a year is probably what we're shooting for. Obviously, 10 million a year that goes there, that's kind of calculated as free cash flow. That's a lot of cash to be able to continue um, to explore our property. We're talking about the Sahara
Mm-hmm.
mine itself. The Sahara mine's only 1% of the total land package that we've got, and there's multiple
Mm-hmm.
deposits, known deposits on the properties. So almost in like a string of pearls from north to south. So we're
Mm-hmm.
starting in Sahara because it's most advanced, and we'll work our way down as we go with free cash flow. We'll be exploring a little bit to advance all those as well.
Mm-hmm.
Our ultimate, we got to make sure that there's enough production life to stay ahead of what we produce every year. So we're looking to target
Mm-hmm.
about 10 year 10 plus year primary production
Mm-hmm.
capacity.
So your way of shareholder creation would essentially be focusing on cash flow first instead of the traditional way in the mining space that is just exploration and then maybe permitting and then afterwards production in like 15 years.
Yeah. Um, I think in a really strong junior market, uh, exploring, finding something and building it up. It's a great model. And
Mhm.
we haven't pivoted away from that. Like I had mentioned, we're going to continue to advance our gold assets, and we'll be pretty,
Mhm.
aggressive on future acquisitions and stuff. Very likely what the intent will be is to spin out the gold properties here, when the market bears that sort of business model. But right now, and you can don't take my word for it. Ask any
Mhm.
CEO in mineral exploration right now. It is terribly difficult to raise money
Yeah.
on greenfields exploration. So I basically looked at it in two ways. To say we can keep kind of we're not going anywhere. We'll be fine, but we could keep going, raising a little bit of cash every time, and advancing the gold properties. But I believe that if we could get that done, it's going to be at a lower share price even that we are right now. Like when we had announced, and a lot of we had
Mhm.
some really good gold announcements as well. So I'm not going to push everything on the uranium, but at our low we were done at 4 cents or so 4.5 cents or something. So even raising money at 4 cents or 5 cents versus 7.5
Mhm.
cents, it really helps the dilution. We could keep going, but I think at the end of the day, we'd probably end up with 100 million shares out, anyways. By the time the market starts to realize how much of
Mhm.
a buying opportunity the junior space is. So we elected to go look for a bit more of an advanced project. We weren't necessarily looking for uranium. that was just kind of what fell on our plate. But taking a deeper look at it, it had all the right elements to push the near term production front. So that's kind of the story behind that, and why we're focusing on that. And the market seems to be receiving the advanced, the near term in the mining space cash flow story more right now.
And as we're sort of at the end of our interview, are there any last remarks or things you want to highlight about your company?
No, I think we got pretty much through it. I can give you the elevator pitch on the Sahara Uranium. It's like we had mentioned, it's near term production. We're trying to get out of this dilution phase as quickly as possible. We're 10 miles away from a facility that's being built, which is going to save us $50 to $100 million to get to cash flow. This property itself, I don't think people realize how advanced it is. It's got an underground decline. It's had a reserve done on it. There's been 100,000 meters of drilling. To repeat just the drilling today, 100,000 meters of drilling would probably cost you 10 to 15 million US. All of that is done. We are significantly more advanced than a lot of the peers in our area. I think they have great projects, and I hope that they get to where we are as well. But we do really have near first mover advantage aligned with Western Uranium to get production going as soon as possible. So.
It was great talking to you, Darcy Christian, and I hope we can arrange an interview again, and perhaps when you're more advanced on your projects, and hopefully get some news lined up. Yeah,
sounds good, Lucas. Appreciate it.